Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, March the 9th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. These are our trade plans. We do not know what the market's going to do. We create two main hypotheses based on whether or not the buyers or sellers take control, and then we have two alternative hypotheses for trend type scenarios. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, in the pre-market session, and then we do daily trading and analysis during the course of the RTH session for our members. And again, if you're interested in getting a free trial, send me an email at quantumleapfutures@gmail.com. So let's get the disclaimer out of the way. Where is my disclaimer? Oh, forgot to get it. 1 second. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, own trade plan, and own risk matrix. So taking a look at yesterday. Yesterday, our main hypothesis was a open auction out of range, a move down into the prior day, come down and close the gap, and we were looking for responsive buyers to step in somewhere between the 29 and the 24, which was our overnight low and the month open on the M contract. And then we were looking for buyers to rotate us up into the overnight high and take out that TPO single at 42.25 and then balance and go sideways. It was kind of, Hypo 2 was an open auction with a move up into that TPO count and find responsive sellers and rotate us down into the body and stay down here and then get a late day probe into the overnight low and down into the VPOC, which was below it, the 27, where was the VPOC? 27.19, 17 area. So we got Hypo 1. It was a pretty choppy day. It was hard to trade for the most part. And then if you missed this right here, the opportunity was the long off of the mid here into the close. We did get a neutral day. We broke both the IB high and IB low. Not really extreme, even though it closed above the IB. It was, I wouldn't. It's on the borderline of extreme, but we were expecting continuation to the upside towards this 52, and of course in the Globex, we opened up and failed to hold outside of the prior day range, and then we basically just went sideways, creating price acceptance right here around that 43.75, and then of course just before the news they took it down, put a new overnight low in, and then on the news non-farm payroll, they popped it up and made new highs and went and hit that 62 target that we've been looking for. And currently right now we've pulled back, creating a distribution zone here around this 58 area with the LVN at 54. Remember that 54.50 is our microcomposite value area high, and we'll take a look at that in just 1 minute. So let's take a look at the news. So of course, the non-farm, we came out with 313,000 versus 200,000. Really nice beat. Manufacturing payrolls better than expected. Average weekly hours better than expected. Just private non-farm payrolls better than expected. Capacity utilization rate out of Canada better than expected. It was just market was waiting on this. Remember that last night we got a little bit of a push up, but the market was kind of mute in terms of the surprise announcement about North Korea planning to meet with Trump. And there's going to be all kinds of spins on that today. So we are going to see some headline risk today. Moving forward, at 10 o'clock, we've got wholesale inventories, ECRI, and then we've got Rosengren speaking at 12:40 Eastern Time. We've got Chicago Fed Evans speaking at 12:45. Then we've got the rig count, Baker Hughes rig count at 1 o'clock. So we got a lot of headline news, and we've got a lot of scheduled news coming out. So each morning I have a routine. I like to start my day looking at a simple candlestick chart. Use a 9 EMA and a 20 SMA. I start on a monthly basis. What am I doing with this? Simply making sure that I remind myself where we are in terms of the trend in the different time frames. I'm looking at, is there slope and separation on the 9 and the 20? This is the 9 EMA, 20 SMA. It's the moving averages I use. It's just something that the levels that I prefer. I don't trade off these levels. I use these levels for homework. We've got good slope and separation. The trend is very much intact on the monthly, even though we did challenge it in February. So far in March, we've held above the 9 and the 20. We've got good slope and separation. Going to the weekly, we continue to see these inside weeks. We did have a move down, and we were looking at a possible trend change on the weekly with that move down to the low at 25.34 a few weeks back, but then they popped up, and basically we've been fighting, and currently, we've just bounced again this week off of the 20 SMA, and we're back above the 9. So the trend is still intact, but it's weakening on the weekly. Going to the daily, you can see that it looked like we were going to get a trend change. They started trending down with those downward days, and we've taken it back, and now we're starting to get slope. Not so much separation, but we're starting to get slope to the upside. So this trend is still intact for the most part on all the larger time frames. Going to the 4-hour, same thing. It looked like we were going to get this downward trend and the trend change. Then they took it back. They came and challenged it, and now we're getting slope and separation to the upside. Just keep in mind, and I know it's a ways away still, but remember that we have what we call an unequalized high in the all-time high. The Globex all-time high in the June contract is 28.8325, and the RTH is 28.80 and a quarter. This historically is never left alone. And it is likely to get challenged. I'm not saying it's going to get challenged today, but it is something to keep in mind. And then just going down to the 30-minute, then we'll get into the structure of the market. You can see on the 30-minute, we've basically been consolidating sideways and chopping above and below the 9 and the 20, and then the big move on the non-farm. Our scene of the crime is one tick above the prior day open, the RTH open. Our NFP scene of the crime is 38.75. Yesterday's RTH open was 38.50. So we'll have a tendency at some point in time to come back and test that scene of the crime. We've got a double distribution overnight. Inventory overnight is, was pretty balanced. It was about 50-50. It was pretty much neutral in time and volume, but now we've spiked above it, and I'm going to be watching this 54 area, and I'll show you why if we go to the composite. All right, so I moved my micro composite, and I moved it to the breakdown day. We tried to hold balance after making a new all-time high, and then we fell out of balance, and we had those big down days. And so I've moved my micro composite. It runs from February the 2nd now through to yesterday. We were in this balance area. The value area high is 2754.50. It's right near, just below the little LVN that we put in the Globex. So that's going to be my over underline today, is the 54.50. If we get below it, then I'm looking for a move back to close the range gap. We're going to have a huge gap today and possibly come back down if we see some weakness back towards the scene of the crime and back inside of this smaller microcomposite. The 3-day microcomposite VPOC is down at the 31 area. Above us is where we tried to hold value. The last time we were making our way back up, and we were targeting the 50% of the significant breakout candle. We got that, but they were unable to hold. They tried to hold up here at the 77 area, and then they had those three black crows come down, and then we basically chopped, and now we're breaking back out of that value. And this area here on the profile is still pretty thin and needs a lot of air work right here. So taking a look at the daily and start moving our trade levels over. So our overnight high is all the way up here at the 63.75. Our overnight low is down at the 35.50. The microcomposite value area high is 54. This is also going to be our over underline. And if we open up right here, now this will have to be adjusted, obviously, because we're not open yet, but our currently trading 61. Our close yesterday was 44. So our half gap fill is 52.50, which is just a couple ticks above here. It may even be this, but I'm going to just put it at the 52.50. And that will be our immediate target for the half gap close. And if we get back inside of the microcomposite value area. Currently, right now, we're trading at 60. So in terms of the levels, I've already got all the levels put in here. I've been doing this ahead of time now because of the fact that it cuts down in the time. We're Friday. Our week open is 26.88 and a quarter. Our daily 20-period average true range right now for the full session is running at 53.20. So our critical mass, our weekly critical mass is 2741.50. 41.50. What do I mean by critical mass? Well, critical mass is a theory that I believe in and I have been following for years. And what it means is that right now we're in a positive week. The open of the week is 26.88.25. Our 1 day left of trading today with the average true range of 53.20 brings our weekly critical mass to the 41.50. As the day moves on, if we fail to get back inside of that critical mass and there's less probability that we're going to go, I think there's very little probability that we're going to go and challenge the week open. A lot of times the one side of the market, the sellers in this case, step aside and the buyers take control and we drift into the close of the week. So just keep that in mind. It's not a trade, idea. It's just a guide to say, hey, don't fade on day where we're above or below critical mass, because it's not likely going to be a good fade into the close. So obviously we've had a big move Our overnight high is just above us. Our overnight low is way below us. So I'm looking for a balancing out here after the NFP. So, and I'm looking for a move back towards the half gap. So my main hypothesis today is a open auction out of range, a open rejection reverse, one of those two things. I'm looking for wide swing on the open. I'm looking for the overnight high to get taken out, and then I'm looking for responsive sellers to step in, rotate us down through whatever the open is, and push us down and come down and test this 54. I'm looking for it to chop here, try to push down into the 52, and then I'm looking for it to base here, and I'm looking for it to just basically create some balance in this area between the 65 and the 54 and close the day above the microcomposite value area high. That is hypo 1. Hypo 2 is an open auction out of range, a push down into the 52, push down a little bit further, come down and test the range high, and then base here and work our way up. And basically, hypo 1 and hypo 2 is basically the same. The only difference with the hypo 2 is I'm looking for a push up into the 75 area. Our hypo 3 is going to be a gap and go day, open auction out of range, failure to get below the value area high of the microcomposite, push up into the 77 area, balance here in that prior area they tried to hold value, and then push up towards the 2800 and possibly get into the 2790s. Our daily ATR is running at 53.20, so off of the low overnight of 35.50. Our upside daily ATR target is 88.75. What do I mean by that? I mean that based on the average true range 20 period, that we have the capabilities of getting up into the 88.75 area without really getting a huge amount of expansion within the 20 period average true range. Off of the high overnight of 63.75, our downside daily ATR target is down at 27.10, 27.10.50. So again, we have capabilities of coming down here. So hypo 3, again, gap and go, failure to close the, get below the 54, push up into the 77, chop here, and then get a late day probe up into the 88.90 area. That is hypo 3. Hypo 4 is a breakdown day, open auction, take out the overnight high. It looks like we're going to take out this overnight high even before we and put a new one in before the RTH open. But find responsive sellers, come down into the 52 area, and then chop, fail, push down, and come down into the overnight low and back into the microcomposite and back down here in the 33 area and basically chop sideways, maybe a late day probe to challenge the month open at 23.75. So those are my three main hypotheses in the ES. Quickly take a look at gold. Gold is near a critical level for us. We've been talking about this the last couple of days. The 14 area, I did trade the NFP on gold, and I took the long with the failure to hold below it and got a nice couple trades there. But if we come down and get below 14, I'm looking for a push down into testing the 13.036 and the 1300 level, and anything below the 1298.20. We've got that major target down here at the 1284.90. This is the most traded price in gold going all the way back to October the 24th, 2008. So it is our composite VPOC, and below 1300, it's going to be a big magnet, and I'm going to be trading gold short into it. I'm actually going to be looking for a short today below the 14 towards that 036 target. If we fail to break 14, look for them to find more chop between the 19 and the 23 area and continue to mature the auction here around that 1320.90 and stay inside of this balance that we're in right now. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.